Hey, and welcome back to the Sit Rep. I'm Will Corrente. I'm here with Julio Gonzalez, who's the founder and CEO of Engineered Tax Services. Julio, you've built Engineered Tax Service specifically over the years to help people with their tax problems and to mitigate tax issues, but you're also an expert on tax and supporting entrepreneurs through tax. And so over the past several months and even several years, you've helped a lot in shaping tax policy with our government, specifically in Trump's first term with the 2017 tax package, and now again with the Big Beautiful Bill. So can you, first of all, walk us through your journey and how you got started in tax? And then also what drives your passion for helping entrepreneurs and also helping congressional leaders and our government do the best thing, do what's in the best interest of the people in terms of tax policy?
Yeah, it's been a long journey. Well, gosh, I started in college because my wrestling coach had an accounting firm, and he would give me an opportunity to make some money, during school. So that was awesome. And I took that to work in accounting for 20 years with big accounting firms. And then I saw in the big accounting firms, we were eliminating taxes for big, big owners of big companies, private, public companies. And I saw that gap between what we did for the Fortune 500 companies and their CEOs versus small businesses and those CEOs and those entrepreneurs was vastly different, right? They were well overpaying their taxes. They weren't taking advantage of all the tax benefits afforded to them. And the accounting firms they worked with nationwide, mid-sized firms, regional firms, just didn't have the resources to help their clients like the big four firms. So really, I wanted to create that equality. And now, our firm, Engineered Tax Services, works with several thousand accounting firms. We help them with tax credits, tax incentives, grants, tax planning, so that ultimately they can have the same resources as a big accounting firm, a national accounting firm, without having to bring those resources in and bring that equality to their clients. So it's an awesome journey. And that kind of really spurred the reason to get into politics because, without good tax policy, entrepreneurs, small businesses that are the backbone of our country can't grow. And, I saw that tax policy was so bad until President Trump came into office. But remember then, we didn't get the big healthcare bill done. So we had one strike against us, and the tax bill wasn't going much better. Even though everything was aligned, you had the House, you had the Senate, you had the administration, it takes threading the needle. And, I think every lawmaker up there doesn't necessarily have a tax background. I think very few of them do. Very few of them sign the front of a check, like we do.
Well, yeah, I mean, that's a story for another day, which is, how few of our congressional leaders, how many of them are lawyers by trade, and how few of them have actually ran businesses, started businesses, and actually understand the economic engine of the constituents that they're voting on behalf of.
Yeah, I mean, it's true. I mean, they don't have that background. So really, my dedication to the administration, to Trump, his team was to, work with Ways and Means Committee, Senate Finance, and help them craft a bill that was equitable and brought fairness to small businesses and also gave them tax benefits that helped them grow their businesses.
Yeah.
Because it was so onerous before that, Will. 50-60% of your net income as a business owner was going to the government. That partnership's onerous.
Right.
We were going to bring down income tax rates and create some incentives.
And tax rates are just the tip of the iceberg, right?
Right.
I mean, that's like the big thing that we all see, but then we have permits. Like if you look at here in West Palm Beach, you have to have a city permit, you have to have a county permit, which is a tax, right? Then you have your employment taxes that you pay to your employees on their behalf. And so, in aggregate, when you look at top line numbers of like, the highest tax brackets, 39%, well, no, it's really significantly higher if you are part of the engine that's producing in the economy.
Small business owners face 40 taxes, state, local, federal,
Right.
that are so onerous, right?
Right.
And massive regulation, like you said. Well, but my help is, can we help on the tax side, right?
Right.
And make a difference. And I think with this new bill, we made a great difference. What's different from 2017 to this bill today is that it's permanent. All these tax benefits we made are permanent.
Yeah.
That's huge because every year the small business owner is like, okay, what's my new tax code? And the accounting firms.
Well,
They have to adjust too.
and the hardest thing, what I love about the permanency of it is so many times you've done these, Congress has done these great bills and the president has signed them. And then it's like, oh, we'll revisit it in 4 years, right? Which then just creates another opportunity for contentious debate and political, maneuvering 4 years from now, and doesn't really solve the long-term problem. So it's awesome that these are long-term permanent fixes and solutions to the tax code. And so when you look at, you've spent a lot of time in DC over the past several months and the past year, and working with specific members of Congress and the Senate. What has been your experience in those meetings? Is it that people understand the small business owner is the engine of the economy and we need to do what we can to help them and make life simpler? Or is it more focused on the individual taxpayer and what they're experiencing in their day-to-day?
I think it's both. And I think they understand both. I think Jason Smith, who heads up Ways and Means, he's our congressman from Missouri. He oversees tax for our country. I think he understands both. And this bill addressed both, right?
Yeah.
They did, right?
Yeah.
No tax on Social Security
Yeah.
for people 65. That's massive.
Yeah.
And the no tax on tips.
What was it? It wasn't until 1983 that, prior to 1983, there was no tax on Social Security.
Yeah.
And then it was taxed.
Yeah.
And so it's interesting that now 42 years later, we finally, created, we've righted that wrong.
Thank goodness.
So continue.
No, thank goodness we did that. But we did that on the individual side, and no tax on overtime, things of that nature for certain people. And for these individuals that are like, have their own businesses.
Yeah.
We made these tax cuts permanent. We actually, for small businesses, $31 million in revenue and under, we made some of the tax benefits that you could go back to 3 years and reclaim these tax benefits that were missed.
Oh, well, Julio, we need to talk then. I need you to help me with that one.
How great is
Let's
that?
go back 3 years.
Because it helps small businesses. Like, our phones are ringing because, all of a sudden now those tax benefits they missed because they went away for those 3 years, we reinstalled it. Now, not for big businesses, not for the Fortune 500, but 31 million and under, we felt, well, that's a good cutoff.
Yeah,
real small
definitely.
businesses. And so how great that it addressed that.
Yeah.
That's so significant.
Yeah.
That they can have these tax credits and go back and get refunds.
Yeah.
And
so let me ask you a question. I'm sure a lot of people have read Rich Dad, Poor Dad. And one of the things Kiyosaki has always said is that the tax code was not written as a guide to pay taxes, but it was really written as a guide to minimize taxes if you're contributing to the economy, right?
Yeah.
And starting businesses, et cetera. And so do you agree with that, or you think that the tax code was actually written for people to pay taxes?
No, the tax code, 1 million+ pages now, right? Is every page is how do you reduce your taxes, right? So it's written to reduce your taxes. And it's not the most easiest. And then not only do we have 1 million pages of tax code, but we have 1 million pages of tax law that tell you what the tax code means, right? So, and tax court cases. So it's, it's great. Every page there has a nugget for an individual small business owner on how to reduce taxes. And Robert's correct. He's right. He's like, it incents people and things the government thinks they need, and they don't want to do all by themselves, right?
Right.
Like, let's just talk about housing, right? There's so many tax benefits for creating affordable housing in this country, right? Federal, state, local. But that's because the government thinks they can't do it all.
Right.
Right. So they're like, we need some incentives to help this, but it'll grow the communities. It'll be a great return on investment. It'll be a good public-private partnership. So obviously those are critical. I mean, those are like the biggest example. And Robert's always like, invest in real estate because you get all these tax benefits because the code's written for that.
Right.
It's written for that because that's what we need desperately in our country. But the government doesn't want to take on that debt to build it.
Yeah. Yeah. You know, what's funny is, when you look at, and I'm going to use a general term in sense of, why do wealthy people stay wealthy? And it's that because they can afford the advisors that can help them to mitigate their taxes, et cetera. I think, when you're looking at what's happening with AI, that's kind of democratizing that a little bit. So if you don't mind, I know this is totally off the cuff, but if you can't afford a high-priced tax advisor, what are some questions or what are some things you should be asking your tax advisor as a business owner to help you take advantage of the changes from the big, beautiful bill?
I think it's really great you said that, because when I'm at conferences and I'm talking about real estate or talking about small business owners and what they can do for their taxes, I think the biggest thing they should do that they don't do is be proactive, right? And you have an account, but he's reactive, right? He's not coming to you and saying, hey, we should do these things, right?
Yeah.
They're just like, they're overwhelmed with new tax code every 4 years. And every year that tax code's changing.
Right.
So they're literally trying to keep up. And so they're struggling, right? So they're struggling to figure out this new code. They're going to be a couple years behind on this new bill, right? It's going to take them some time. So you have to be proactive, like with your health, right? You have a doctor, you have whatever you're doing for your health. Same thing, right?
Yeah.
So what would I do? If I were a small business owner, I'd go to ChatGPT, I'd go to Gronk, I'd go to whatever and say, here's my business. And here's what I do. What are some opportunities to lower my taxes from the federal and state side, personal and business, right?
Right.
And then take that information and say, by the way, Mr. Accountant, I read these things and can we talk about these things?
Yeah.
So I think
that's
like
great.
With health,
no,
right?
That's awesome.
Like
Thank you.
Your health,
Yeah.
you got to go to the doctor,
right?
Like however often. I think you got to do the same thing.
Yeah.
And it helps with the health too, right? Go into chat and say, okay, I'm not feeling this, but that's a little more complicated, but it's the same thing. So I like what you're saying. I tell people to do the same thing. Take a minute, type it in, send it to your account, say, hey, can we set a meeting?
Yeah.
I want to be proactive. Like you just, you can't really.
Well, and the other side of that is, AIs have been known to hallucinate, right? So just using AI to say, hey, I'm going to do my taxes myself. Let me have AI tell me what to do. I do like the idea of, bringing it to an expert, someone who knows, as that double check of what's happening.
And AI is completely, like not accurate on tax things because, it just changed.
Right.
You think it's not caught up with the changes.
Right.
And it changed every year up to this year. So, sometimes when you look at AI and you type something in, it's like, you can tell it's referencing 2015, 2016.
Yes. Yeah.
And
I've noticed
it's not 100% accurate.
Right.
But at least it gives you some ideas to talk about with your accounting firm.
Some of the things that I've done with it is I've said to it, today is July 16th, right? The tax code has been changed. Please update your response. And in Grok anyway, it'll say, oh, thank you. Yes, you're right. Et cetera.
So you have to be specific with your parameters as well. But I even think, even as specific as you are, this tax code is so complex.
Yeah.
It's a lot of pages.
Yeah.
And, even Gronk or whatever, even as specific as you can be, it's still off a little bit, I think.
Yeah. So when you look at, the big, beautiful bill, what are some of the things from your specialty of taxes, right? You do R&D tax credits, you do cost segregation. I think cost segregation is one of the biggest, right? We were in that sliding scale that we were going to go sunset over a period of years. So what's happened with cost segregation, and is there any sort of catch up or go back provision? And then maybe if you want to talk a little bit about if there's R&D tax credits or some of the other specialties that you guys focus on that are in the big, beautiful bill that people should be aware of.
Sure. Well, like we talk about Robert Kiyosaki, he always talks about real estate. Why? Because it's an investment you get to expense. Right?
Mhm.
You don't get to expense a stock, a bond.
Right.
You invest in those companies and they take all the tax benefits, not you. And so when you start investing in yourself in real estate, that's when the government starts rewarding us, not when we invest in other companies. Right? We put our
Interesting.
money into Exxon.
Yeah.
Well, what do? They go buy the tax benefits.
Interesting.
Right? But then
Yeah.
we're
Yeah.
not getting that benefit, right?
Yeah.
We're just a silent partner. So when you start taking on the role of investing, right, in real estate, well, real estate we get to expense in this country. So it's great. You're buying a building for $1 million, you're writing off $1 million.
Mm-hmm.
That's great. And you're usually leveraging it, right? So maybe you put down $200,000 and getting $1 million in write-off. Well, what cost segregations is, hey, how much of this building is structure versus non-structure? And under that report, then non-structure can be expensed immediately, right? Because bonus depreciation now is 100%. So you buy equipment for your company, you buy vehicles for your company,
Excuse me.
you buy a jet for your company, you buy real estate, anything that's personal property, like in real estate,
Excuse me.
bless you, is 100% depreciated expense. Bonus depreciation was at 100% in 2017. And then 18 was 80, right? And then it started sliding down. It was almost nothing, right?
Right.
So, oh my God, thank God we restored that to 100% and made that permanent.
Now, the 100%, does that go back to January 1st of this year?
Yeah.
Okay.
Right. So the other, if it was last year, it's 40.
Right. Right.
2 years ago, 60, 80, 3 years ago.
No, but that doesn't affect the 179 deduction.
No. They
Right,
made that
so
even better. They increased that, right? So they increased the 179 deduction from, I think, 2 to 2.5. So that's really good too.
Yeah.
A lot of benefits for business owners for
Yeah.
investing in yourselves.
Now, 179 was originally back in George W. Bush days, right? He wanted people to he wanted farmers to be able to invest in farm equipment, et cetera, and recognizing that like a new combine is like a $2 million purchase, right? So if you're going to buy something that's over 6,000 pounds, you should be able to write off the entire cost of that in year one.
Well, and I agree.
Is that correct or
that's
incorrect?
correct. But that makes logical sense because you as a business owner bought it. Why can't you expense it? And the government said, well, you can expense it over 5 years because that's how long you're using it for.
Right.
It's like, no, but you're out of the money.
Right.
You just spent the money to
Right.
get the equipment. So why can't you expense it all? So thank God those like principles now match forever.
Yeah.
Permanent. We don't
Yeah.
have to keep going back on the sliding scale. And that's such a huge benefit.
So R&D tax credits, any changes
This is the
there?
home run, right? So on the R&D tax credits, if you're $31 million in revenue or under, now you can go back and claim them for the last 3 years,
Okay.
right? So that's a big home run because R&D got phased out under the, Biden administration, right? And it went down to basically no benefit. Now it's back to supercharged, 100% benefit and get to expense it all under this bill. And you can go back 3 years and go get all the missed benefits. So
Yeah.
that was a big one.
So the no tax on tips, it helps everybody in the sense of, we've so far moved into the gig economy, right? And you have so many people that are doing Uber, Lyft, DoorDash, all of these other, type of side hustles, beyond just the waiter, the waitress, the server that you see at the restaurant in terms of the no tax on tips. So in a way, no tax on tips is helping that entrepreneur, sort of that side hustle entrepreneur as well, correct?
Thank goodness. I mean, they're the ones helping our economy, busting their butts every day, working so hard. And, you just can't continue to tax every dollar they make.
Yeah.
So they can't get a car, can't buy a home, can't invest in themselves. So thank goodness Trump wanted that and got it.
Yeah.
Demanded it, right?
Right.
And they listened.
Right.
Congress listened.
So when you look at your input behind the scenes, what are some of the things that you advocated for that were included in the big beautiful bill, and what are some of the things that you're looking forward to the future and saying, okay, now that we got the big beautiful bill out of the way, here's the next steps. These are some additional things that we would like to see going forward in either rescission packages or additional legislation.
Yeah, which they're already starting, right? You saw yesterday they got that bill to start cutting expensing in the government passed through the Senate, and J.D. Vance had to have his one vote counted to go through the Senate, so that's good.
Which is really interesting, right? That, every Democrat votes against everything that puts money in people's pockets. Like, I just don't get it.
Everything.
You look at the big, beautiful bill, right? And they used to be the party of the working man. Like, that's just, it's just unfathomable how we've flipped. That Republicans, who when I was growing up was the party of the rich, the Democrat was the party of the working man and the blue collar, and now that's flipped. Now they're the party of tax, spend, help people that are not contributing to the economy, and the Republican Party has become the party of the working man and the people that are trying to get ahead in this country.
And thank God they're in place to help the small business owner, because every tax benefit had eroded. Regulation was massive during the Biden administration, from mandating that we had to vaccinate our employees or be fined.
Yeah.
And then we had to start filing these additional reports, that they were requiring for all our companies, right, to make sure that they were all, oh my God, it was...
Yeah, the BOIs, right?
It was enormous. Like, you woke up every day as a business owner to a new regulation.
And I think that one of the things that non-business owners don't understand is that there's two ways that the government stymies business. One is through tax policy and fees and expenses, et cetera. But the other is through administrative burdens that are either imposed by the Department of Labor or OSHA, or, even look at E-Verify, right? E-Verify for companies that have 25 employees or more, right? There's a lot of companies that have 25 employees that are not big businesses. They don't have an HR department, right? And so, but if you're Amazon, you don't have to follow E-Verify. So, like, there's a disconnect. And if people don't realize that, like, those are some of the non-tax tax burdens that are put on small businesses.
And that's right now what they're trying to remove, is all these regulations. But it doesn't end at the federal level.
Right.
Every state, right, has their burdens. Whether it's your employees in New York, California, some of these other states, that it's just like, why do you think the businesses are leaving those states?
Yeah.
Right? Because the regulations aren't changing there, nor is the tax benefits in those states. So, I mean, the regulations are so tremendous. That's why I'm here in Florida. And that's why everyone's like, you ever think about moving? No, where would I go?
Well, that's your choices are South Carolina, Tennessee, Texas, or Florida.
Yeah.
Like, I mean, you go to Montana and some of but if you want to keep relatively mild winters and, and nice summers, like, those are your choices from a tax perspective as well as a quality of life perspective.
And regulation, right? I mean, it's, thank goodness to be here in Florida and, be able to have a governor that cares about small business owners and, eliminates a lot of regulations here and tries to help them.
Yeah.
And, now we have the federal protection as well. So,
So if you had to rank, like, your top 5 things that you were most excited that got into the big, beautiful bill that you had advocated for, what would those be?
Yeah, definitely bonus depreciation going to 100%. R&D tax credits now going back 3 years and getting refunds on those. The permanency of the bill, like, how do I rank those? I mean, permanency, I got to put at the very top, because now we don't wake up to a new tax code every day.
Right.
And I think those 3 are so specific. But then to the individuals, I really think, not taxing the elderly on their Social Security. That's big. And I really like that the individuals can have the no tax on tips. I mean, I think those things are, they're monumental to me.
And the overtime is a big one.
Overtime's big. I mean, for the employer and the employee.
Yes.
Right? It doesn't create that, well, we can't really. Why would we do that? And, when you think about those things, what I think is the best about that is because then you start to offshore those activities.
Yeah.
Right? And so you just create, R&D going away lasts the 4 years, right? You start offshoring.
Yeah.
right? Because you're not rewarded for your innovation and your research. But every other country rewards you much higher,
Right.
right? And that's why the big companies, if you could, put everything in Ireland, you would, right? But Celsius is in Ireland, and all the big drinks and all the Meta and all those things, a lot of it's there because the R&D there is even better than it is here.
Interesting. Interesting.
But the small businesses can't do that. But at least we've given them some permanency. But listen, not everything's perfect. I was up in D.C. and I met with the new IRS commissioner. I met with Treasury, and we still have some onerous actions with the IRS. Right? They continue to, I think, unfairly and unjustly go after small businesses. And because why? Because small business can't fight them.
Right.
And if you're rewarded as an IRS agent for how much money you bring in, and you're like, oh, small business, and they're not going to fight you, right? And it's like, okay,
Yeah.
I don't have an attorney, and then scare people,
Yes.
right? That's what Biden did, right?
Yeah.
Let's put 800,000 agents,
87,000 new agents. Yes.
yeah, but
To go after the wealthy.
Yeah.
Which they're not going after.
Right. So they weaponize it. And the wealthy don't care. Like, they got their people to fight it. And they're under audit anytime. So, that was my message to Congress last week was, even though we've done some great things, we still have to realize that there's some unfair things going on at the IRS, and we got to clean that up.
Yeah, I think it goes back to, our beginning of the conversation when we were talking about advice and, the people who can afford advice. But it's very true that, like, when you get an IRS letter, as a wealthy person, you send it to your lawyer or you send it to your accountant who you've had for the past 20 years, right? If you get it as someone who does not have those resources or can afford those resources, then it's very scary and turns your entire world upside down. And then what do you do?
Right. And it's at the state level too. Like, states can come after you. And like, I had state of Illinois say that there was something missed 10 years ago with an employee. Who knows that with ADP? So you got to trust ADP on doing those things back then.
Yeah.
And they just took the money right out of my account. They just went into my account and took the money.
Yeah.
And notified me after the fact.
Yeah.
They had access to my account.
Yeah.
A state. You would never see that in Florida.
Yeah.
But,
Yeah.
you see it in Illinois, you see it in California. Like, how do you protect your assets?
Right.
When a state can just make some claim about your business,
Yeah.
and then debit your account, and you have no control.
Yeah.
They just go right to the bank and say, here it is. And
yeah. I really like what we've been hearing from Governor DeSantis over the past several months, especially in regard to property taxes, and especially when you look at the older residents. West Palm Beach is going through an absolute boom in real estate and desirability of people wanting to be here. And to look at, someone who bought their house 40 years ago, even if they're homesteaded, are getting hit with appraisals and reassessments, right, that eventually make that home, unaffordable for them. And if you look at it from the governor's perspective, is, hey, you bought this house, you paid it off over 30 years, right? But now you're forced to move because you can't afford the taxes.
And insurance.
And insurance, exactly. And so that's, one of those undue burdens that we need to figure out and answer for. And part of that, I'm sure, is government efficiency. Part of it is looking at the services that we consume, maybe on a consumption basis and not on where the taxes fund the services, where instead the services that are consumed are fee-based and are supported by fees.
Yeah, I think, I've been working with the governor on this issue and with the speaker here in Florida. And, what I had proposed was, at least let's help those people that have had their homes.
Yeah.
And are here 12 months a year.
Yeah.
And have been here for a long time. And let's at least start there. So it's, and graduate it up and, like, remove the burden for them. Right.
Well, I think that, if you're over 65, you should not be paying school board taxes anymore.
Absolutely.
Huge burden for Florida residents, especially when you no longer have children that are participating in the system.
I agree.
You know, why are you paying that?
Right.
Same thing with the homestead exemption. Maybe the homestead exemption when you hit 65 should be a percentage of your assessed value, not a flat dollar amount, right? So let's say your house is assessed at 700,000, your homestead exemption at 65 should be 50% of your assessed value.
Yeah, we got,
or something like that. But
I agree with you.
But we need ways to protect the seniors that are, you know, because a lot of the seniors, they're the ones who created the community in the first place. They were the teachers, they were the firefighters, even they were the small business owners, you know, that have been in the community and supported the community with employees for 40 years.
I couldn't agree more. And if we at least start there and give them some equitable, because they're not using the system, right?
Right.
They're paying in the taxes. Their insurance is up. Their taxes are going up. And what happens? They get kicked out of their communities. They have to go somewhere else, and they're on a fixed income. And by the way, then you have all these companies coming in, buy their homes, doing the Airbnb, right? So raise the taxes on them.
Right.
They're utilizing the services, I think.
Right.
And maybe have some impact fees for the companies.
And the companies that are buying those houses with Airbnb can use cost segregation.
That's right. That's right. Please look us up for cost segregation.
So, you know, one of the things, what provisions in the Big Beautiful Bill did you like personally advocate for? Like, what was besides cost segregation, R&D? Was there anything specifically that that is a need for your clients that you were like, I really want to see this in there, and it wound up in there?
Yeah. So of course, we increased the 199 deduction.
What's that?
Right. So 199 is when we made the corporation tax rate lower in 2017, we moved it down to 21% for C corporations, right? So 199 was, okay, I'm not a C corporation, I'm an S corporation, so I'm really a personal company. And so 199 allows them to then take that net income and reduce it by 20%. So we took that up to 23% in this bill. I think that was a big adjustment. Okay. Again, rewarding the entrepreneurs.
Awesome.
That's good.
Awesome. Well, cool, Julio. I really appreciate your time today. It was great.
I love it.
Great catching up. I have a feeling that we're going to wind up with like 4 other episodes out of this, because we're going to wind up. I think there's some really great stuff here that we can dive deeper into. So I look forward to having you on the Sit Rep again.
Thanks for having me on. I love it. And if you have any questions, please reach out to me. And
Engineered Tax Services. How's the best way?
Yeah.
For them to reach
tax
you?
Services, right? Or
.com.
Yeah, .com, or I'm Tax Reform Expert on all social media. And just DM any questions, because but you're, like you said, use ChatGPT, use me as a resource.
Yep. Use Grok.
Use Grok and
support Elon.
Yeah, well, who knows? I don't think they get into that debate. All right.
All right, buddy. Thanks.
Care.